Hey, good afternoon, everyone. This is Sam. So today's topic is going to be on money management. I'll talk about the market here a little bit if you're interested in that. I'll wait for a couple questions regarding money management. One thing that I can tell you is in terms of small accounts, one thing that you can do is we did an example of it earlier this week with Net, is you can scale into trades. So that's good money management practice if you have a small account and you are subject to the day trade limits, right? So with the net call that we did on Monday is just a good example. You can buy a call or a put for that matter, and instead of closing it that same day and eating up a day trade, if you still want to stay in the trade overnight, or you just don't want to eat up a day trade, or you just want to lock in profits, right? Let's say that you buy a put. Doesn't really matter where. Let's say that you bought a put up here at 2,500, and now it's 2,455, and you'd like to lock in those profits without selling. Well, what you can do is, since you're long the 2,500 put, instead of just selling it and booking your profits, you can actually sell the very next strike below that. So something like the 2,495 put. You turn that initial $2,500 put into a vertical, and what that does is, since you were long the put from here all the way to here, it will lock in your profits for that move, and then you'll just have a $5 wide spread. So that's probably the only little tip and trick that I can share with you that's off the top of my head. Basically legging into a vertical. You could do that with anything. You could do that with a butterfly. You could do that with a vertical. It's easiest with when you start with just a call or a put, though. So let me know if you guys have any questions on that. That's probably all I'm going to have for you. I really don't have much more on the subject off the top of my own head. I'll just cover the market briefly. This was a 200. I called it out in the session 45 minutes ago. It's holding so far. Here's your 8 EMA on VIX. It's holding so far. None of this should be a surprise. That's exactly what it should be doing. Now the question is, can it get back above these moving averages here? Well, we don't know. I don't see the setup to do that. I don't see the setup to do that. But the fact that it's fighting here at the 200 and with VIX at its resistance, basically you have support here, short term. You have resistance here, short term. It's absolutely no surprise to see a little bit of a stall there around those areas. All right, let me get through some questions here. When scaling in, do you add after 5, 10, or 15%? Well, Jim, I'm assuming you're just referring to scaling into a winner. Like if the trade starts going in your favor, do you continue to add to it? I like to do that, yeah. Usually I'm too quick in and out to properly do that over a long time frame. And in this market, you have to be quick. But yeah, I like the idea. I like the idea of getting in an entry. It moves up. It pulls back to the 8. You buy some more. It moves up, pulls back to the 8. You buy some more. I do like that strategy. It doesn't work in this market because you have very poor trend. It might work to the downside once this thing really rolls over with some speed. But in this market, keep in mind, there's no rule of thumb that'll work in every market. You always have to be adaptable. And in this market, swing trading isn't working. Not true swing trading, right? Not where you can hold it for 2-3 weeks. So in that environment, I probably would do that less. But yeah, I like doing that. Hey, Golden, good to see you. I've noticed that my trading is break even over time. It may be related to things money management best setups over trading. Could you provide some feedback about this? Jamie, what I would say is probably the one thing that I would tell everyone that's having any type of issues, trade less and increase the quality of what you're trading. So what do I mean by that? Well, and yet, and this is why I'm having a hard time with today's topic, because it seems somewhat of an overlap. But yesterday's topic was on managing small account, essentially, and we talked about that a little bit. So the main thing that I would stress is to quantify your own A+ setup. Right? There's something that is a Jamie A+ setup. Right, whether it's the moving averages are stacked, you have squeezes on multiple time frames, you have positive crosses on your moving averages. The indexes are confirming your direction, just things like that. And then once you've quantified it, and I mean actually physically write it out on a piece of paper so that you make that hand-mind connection. And this is my Bible. This is my 10 commandments that I wrote for myself. Once you have your A+ setup, then stick to it. Now, I can promise you this. The writing it down is going to be a lot easier than sticking to it. But if you can stick to what an A+ setup is, you'll naturally filter out a lot of bad trades, right? That's the whole point of having that idea. It's basically you need a filter. And if you're taking too many trades that are breaking even or not doing well over time, probably need to tighten the filter. That lets only the highest quality setups in, and then you can improve your win rate that way. Can I show you an example of this to avoid the PTD? Yeah. I'll show it to you in the queues. Okay, so here's the queues. This is just for the monthly. For example, let's say we wanted to, let's go long. Let's just say we wanted to go long, right? Just to keep it simple. What would be the at the money strike for the long, right? So the at the money strike would be the 183. Right. Now, keep in mind, this works with anything. I'm just doing the most basic example. You buy the 50 delta at the money call because you think the market's going up, right? So let's say that we buy the 183 call. You see how the delta here is 53? Let's be crazy and say that this thing goes up $4. Okay. So we bought the call. What's the mid there? Let's just call it 850 that we paid for it. And then it goes up $4. So can somebody tell me how much it would go up based on that delta? $4. So just using that delta, it would be worth about $212 in profit if it went up $4, right? So you take the initial price. This is just in a vacuum, obviously, and then you add $2.12 of option value, if you will. You now have that put or that call, that 183 call is now worth $10 and what, 62 cents? Okay. So that's just a normal example of a trade, right? You bought the call, it goes up $4, you made $212 or $2.12, and now the contract's worth $10.62. Let's say you don't want to use a day trade though, right? Let's say you don't want to use a day trade, but you want to book the profits. How do you do that? Well, what you can do is you can sell either the 182.5 or the 184. You see how you sell just one strike above or one strike below? It doesn't really matter which one you do. If you do the one above, you'll have slightly negative deltas, but they'll be very small. If you do the one below, you'll have slightly positive deltas, but they'll be very small. And so you take this contract here, the 183 call that's now worth 10.62, and by selling the call either above or below, you basically compress all the deltas, right? So check this out. So let's say that we're long the 183. It's got a delta of 54. Now, once we're ready to close the trade, let's say that we sell the 182 call against it. Well, you see how the 182 has a delta of 56? So your delta is now 0.2 after all is said and done, right? So it's not going to do much after that, but the whole point of it is for it to for you to lock in your profits that way. So you would have locked in your profits on the 183. You now have a 183, 182 spread, and you could just sell it the next morning, and you wouldn't be using any day trades. And frankly, with a 0.2 delta, you shouldn't get hurt. So even if it has a huge move, you don't care. So that'll keep you out of trouble if you have a day trade limit or anything like that. It might be time for me to get out of bonds. I don't think I want to sit through this much of a pullback. I have to get back in. I'll have to be conscious of getting back in. I do think they break out, but I warned you guys. I told you guys. I thought you were supposed to be my you're supposed to be my backup here. I was in a session. This move from here to here cost me $1,500 in paper profits. I should just taken it off there. It's still fine. I mean, the trade is still up, but it's a little move. So I hope that helped, Nicholas. GS looks like a short, considering target of 70 long term. But notice there are more calls and puts on this one. Maybe longs hedging, not sure. Well, let me get through the questions, Golden. If I don't see any other questions on money management, since that is the topic, I'll come back to that. Can you repeat the legging in comment? Yeah, hopefully you caught that. I can't repeat that whole thing, but hopefully you caught the extended example there. When you do that, it locks in the current profit, but then you can also get some more overnight gain if that occurs. Yeah, you could. Yeah, exactly. Xstan, LK Stan. Yeah, you're right. So essentially, you lock in. The whole point of it is just to lock in your profit without using a day trade. Will there be a little bit of profit potential if it moves in your favor overnight? Yeah, there will be. Will it blow your hair back if you do it right? No. It won't because you'll have a dollar wide spread, right? So at most, the most you could lose overnight would be 50 cents on a catastrophic move, or the most you could make would be 50 cents on a massive move. But yeah, you could squeak out a few extra bucks that way. When entering a buy to close order on a vertical spread to lock in profits, what should we attempt to capture? Spice King, that's assuming that you go into the trade with a vertical, right? So that's assuming that you started the trade, let's say, with a $5 wide vertical. So I'm going to answer it that way. In that instance, we typically aim for somewhere between 50 to 80% of the width of the spread. So just to give you an easy example, if your spread is $10 wide, $10 wide spread, then you're looking for about 50, which is on the lower end, but easy to get, to about 75%. John says 80%. I don't have good luck getting 80%. I can get 75%. I can't get 80. That last 5% is just a total bastard. So 50 to 75% of the width of the spread. So on a $10 wide spread, you'd be looking for an exit target between $5 to $7.50. And this would be on the lower end, and this would be on the higher end. If you're doing it like an at the money spread that starts off at $5, so let's say it's a $10 wide spread, you paid $5, then typically I would say try to get about $7.50 for it. Again, don't get married to the targets, right? Don't go into it thinking you deserve $7.50. That's a thing I'm just as vulnerable to as anybody else. It's like, well, I made the right decision. I deserve $7.50. Well, sometimes you don't get it. So be mindful of that. But just the rule of thumb that I use, 75%. Of course, if you go lower, you'll be able to take a lot more profit. But I think 75% is a good one. Maybe a better rule of thumb is 50%, but my own is 75. In this market, would you scale out as it moves down or just get out and watch for a new entry? Well, Jim, I don't know if you're long or short or what you're doing there. In this market, would I scale out? Well, here's what I'll say, Jim, about the question. In this market, it's very, very fine and fair and good to have cash as a position. Cash is a position, guys. If you don't have a good tell on the market, if your read on the market is not A+ crystal clear, you don't have to play ball. That's the beautiful thing about this, right? You can't get in trouble if you're not in the game. And if you're not seeing the game clearly in that moment in time, then just sit on the sidelines. There's nothing wrong with that. No one gets hurt. And frankly, I'd rather sit on the sidelines and just splash around and make bad decisions. So I'll say that. Best way to learn what a great setup is to watch a trade like you guys pick. Yeah, Sean, I would say so. I mean, we're all going to have different strategies, right? That's the thing, is no one's, we're all our own trader. But there is some things that are in sync, right? There's just some basic strategies. So maybe I can show you one or two here. So what's a good looking chart in this market? Kind of hard to find one, isn't it? How about maybe net? Let's just check net again. Back to the well on net. Yeah, so here's just an example of one that I think most traders here would subscribe to. right? And when you make your list of A+ setups, it probably will contain a lot of these elements because they're just good elements to contain. Of course, try to make it your own. You know, you never know if you're Michael Jordan and don't know it. So maybe your trading style is the right one. But just a couple points here. You know, 8, 21, 50, 100, and then the 200 would be down here. This one's too new. But you see how the moving averages are aligned? That's a big one, right? In this instance, they're aligned up. It doesn't matter if they're aligned down, that works too. You can pull up something like LVS to see what that looks like. So there's that. For myself, having multiple squeezes on multiple time frames is important. So there's that. Having your momentum be properly positioned across your indicators is important. So there's that. Understanding where your Fibonacci's are in terms of relative big structures. So you don't have to have all of them, but you see a big swing, figure out where that 618 is. Are you above it or below it? So you see how you get a check on the fibs, you get a check on the EMAs, you get a check on the squeeze, you get a check on the momentum. That's an A+ setup. So when it's an A+ setup, that's what you do. When you're trying to lock in a profit like that, are there any issues with legging into the opposite order versus opening a vertical, such as excessive margin if you're closing the option? No, Mike, it should be fine. I mean, you'll need to take on a bigger size initially when you buy your call or your put, right? That's the whole point of it. But if your account could swing a vertical, like let's say that you could totally afford a $5, $10 X dollar value vertical, and you leg into it, it should it should construct itself the exact same way. I'm talking about being short and the market moving down. Would you scale out as the move moves down, or just get out and watch your new entry? Well, here's what I will do, Jim. Let me go back to the. Yeah. So here's what I'll do, Jim. Just to answer your question. So I'm looking for two things. One, I'm looking for the momentum. Two, I'm looking for where's my support and resistance. So as we sit here, where I found support on the market as someone who just opened a short, you know, an hour and a half ago, you see there, that was support. So am I expecting a bounce there? Yeah. Am I expecting a 20-point bounce there? It's a little more than I would have liked. As long as it doesn't get over this 50, I guess it's okay. There's still a lot of resistance at 25 to get through. But if it breaks that support there, then the next level that I have is at 23.86. If it gets down to 23.86, I don't just close the trade blindly because it's at a level. What I will do is if it gets down here, I will check my momentum. And if my momentum still says that there is room to go, meaning that it doesn't look like this looks like bottomed out momentum, to be honest with you. Like, I don't love that momentum structure. It shouldn't matter today, and it might erase itself overnight. As long as we don't gap up, I think it should be fine. But what I will do is, let's say that we hypothetically break down, go into this level here, and I'm short. The question is, do I take it off there at 23.86? Well, if the momentum looks like this going into that level, I would, because this is bottomed out momentum. If it were to go to 23.50, I would be more likely to take it off there because that's a stronger level. But again, I guess what I'm trying to say here is it's a combination of momentum and levels. Understand if you kind of watch what we say, you'll pick up on what I'm saying. It's not enough to just have a floor. You have to understand what the momentum's doing. So combine both ideas, and that'll give you an understanding as to what to do. And if you have a specific question, I can always look at it for you. But in generalities, that is what I would say. Yeah, and JLP, nothing is wrong with that, my friend. We're all quarantined. We all, we don't have to take any risks that we don't want to take or that aren't clear. So any last questions, guys? I know that today's topic was kind of weird, but we mostly covered it yesterday. So is the slow stoke a paid study? No, it's actually not. Eric did a couple things to it for me, but it's basically just the same thing as a slow stochastic. So if you like the slow stochastic, you can just use the free one on Toss, and it's the exact same one I'm using. And if you like my settings, you can just copy my settings. Keep in mind the slow stochastic is better used for oscillating or back and forth markets. So that's when you should be using it, when you have a range. What are some good free momentum indicators? Good question. So momentum indicators. So I like the slow stochastic for range. So if you're chopping around in a box, I like the slow stochastic. If you're going to be more trending and in moving along with your moving averages and trending, I like the MACD. I like RSI. I like 10x bars, although that's a paid one. You asked for free, right? Yeah. So MACD, RSI. That's pretty much it. I could give you more, but I would be speaking to things I don't use. So I do like the MACD. I use an 834.16 on that, 834.16, and I do like RSI. So and both of those are free. So MACD, RSI, slow stochastic.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me